Welcome, everybody. My name is Michael Camo. I'm here with my good friend Sami Abusaad and James Young because we are covering a very, very important topic today, which is trading plans. Because we know for a fact that not all of you have trading plans, even though you absolutely need them. And so Sami is actually going to take you through his trading plan so you can see what it actually should look like. So let us know in the chat right away, like the big question, yes or no. Have you ever written a trading plan? And was it any good? Did it help you at all? Again, just type yes or no in the chat. And if you are watching on YouTube or Twitter, hit the like button, say hi in the comments. We want to get as much interaction as possible because we want you to learn as much as possible. And so you can ask questions, make comments, say anything you want. And stick around because later on we're going to show you how you can make Sami and James your mentors, because ultimately this does lead into mentorship, because we've shown this a million times. Every great journey begins with a mentorship. We know you've seen Star Wars, The Karate Kid, The Matrix, Rocky, and of course, you know, my favorite, The Mighty Ducks. So these two guys on the screen. So this is really interesting. So Sami and James, they run the Pristine Active Trader VTF together. But the cool thing is, James was actually Sami's student. So Sami was James's mentor, and now James is a mentor as well, because James is a bit of a trading prodigy. He went from 0 to 60 pretty much instantly when he became a trader. So that's how they are working together now. So again, fun fact, this was taken at Sami's mentorship in 2019, and 7 years ago, James was in a webinar just like this one. So I'm sure some of you guys know James from YouTube. He has over 100,000 subscribers. He makes amazing, amazing videos. Premature trader. We don't think he's AI. We can't answer for sure, but we're pretty sure James is not AI. I've actually never met James in person, so who knows? So, you know, and some of Sami's big calls, he had a huge short in SpaceX. Then he took the double SpaceX ETF, IBRX, AERC. He called the bottom in UNH. He predicted Bitcoin 100,000, then Bitcoin 80,000. He bought 2,500 shares on the Tim Walz bottom at 235. And, you know, a great YouTube comment. This guy has insert expletive of steel. And I think that's a real testament to Sami, because Sami is a brave guy who is not afraid to express his opinion and just take big, bold trades when everybody else is afraid. So he had this 163% winner in VNet, ASM, no-name gold stock, huge gain, et cetera, et cetera. But before making $600,000 Tesla trades, Sami was a beginner. He started with a $16,000 account, and then he blew it up. Now he's living in a penthouse outside of San Francisco, so he sort of figured out things along the way. So we're going to teach you how you can write your own trading plan, because Sami is going to take you through his, and then we are going to talk about the mentorship, because everybody needs a mentor to get ahead, and Sami and James do an unbelievable job, and we'll even show you videos with some of their students. So guys, how are you doing today?
I'm doing well.
Great. Yeah, amazing day because Bitcoin broke out. I talked about it in our live stream yesterday, Mike, but you had me pick only one play. And I went with the Guild as my play of the week or whatever, but I mentioned Bitcoin, loved it. So I think Bitcoin bottomed, and with Bitcoin, with Bitcoin bottoming and moving up like that, we'll see a lot of also other sectors and stocks follow suit. So yeah. It was a nice day.
Yeah, if you saw our live stream yesterday, I forced Sami to pick his number one play, and it was Gilead. Gilead is up 2.9% today, but he also sneaked in Bitcoin against the rules. So I don't know what to do there. Okay, whoops. Okay, so Sami, James, very quick, what is your max bench? Because we're getting questions from Friday Boy.
My max bench is 345. Yeah, there you go.
345. All right. Mine is not 3:45. That's all I'll say. Okay, all right. So we are going to begin the lesson on trading plans, and our goal is to have you guys out of here by 5:30 p.m. Eastern Time, which is exactly 41 minutes and 37 seconds from now. Okay, so Sami, I have your slides up on the screen, so you can take it away.
All right, wonderful. So today's topic is really near and dear to my heart because it goes at there's no hype in it, and it goes at the heart of what trading should be about. And the first part of it, which is all about psychology, and the second part is how to write a trading plan so that it suits your own personality, so that you play to your strengths, so to speak. So that's what today's little presentation is about. We'll start off by going all the way back 20 years ago to Radio Shack. Actually 19 years ago. I went full-time April 7th or 8th. I don't remember the exact date of 2007. So 19 years ago. And at the time, I started to think about ideas that maybe not everybody's aware of, but seemed like a sure thing to me. And the one thing that stood out from all the companies that I lived in the Silicon Valley at the time, from all the companies that I would drive by every day was Radio Shack. I'm like, Radio Shack, I thought, it was really overpriced, outdated. Nobody was in their stores. There were like 5 stores in my area. I've never driven by a store and saw a single person in there. And yet, if you looked at Radio Shack, when I was, again, just starting out my professional trading career, I mean, it was really, really bullish. That's the weekly chart of Radio Shack. Almost every week was up. So it kind of baffled me because I could see the reality on the ground. Radio Shack was not going to last. Looking at the chart, it looked amazing. So, I was confused. Eventually, Radio Shack did fall, and I was shorting it, and then the last time I shorted it was at 80 cents. Dropped a little bit, and then it started to break out. So at the time I thought, like, wait a second. My belief, so here's the first thing, is that your trading beliefs, traders trade their beliefs instead of chart patterns. My belief was that Radio Shack would fall was obviously false. That it would go bankrupt was obviously false. After breaking down for a few days, it doubled or almost tripled from like 60 cents to $1.80 in 4 days. So it blew through my stop. I would have gotten murdered if I hadn't covered it because I was swing trading. So that's when it occurred to me that you have to trade what you see, not what you believe. We all have all sorts of beliefs. Some are rooted in reality, some are not. But the truth of the matter is, you've heard this before, market can stay irrational longer than you can stay liquid. So it's true, your preconceived beliefs about what should happen cost you money. So I learned from that Radio Shack story to drop my beliefs and focus on trading what my eyes are seeing, not what my mind is thinking, because I have all sorts of opinions and ideas and beliefs, but those you should actually leave at the door before you enter into your office, and just focus on what the market is telling you. Listen to the message of the market, not your own beliefs. The second thing to be mindful of is that most traders don't even understand their own psychology. And this is a big one, because if you don't understand your own psychology, you're never going to be able to figure out how to approach the market. The market, think of trading like a circle, and you can hit it from different sides, from different angles. You need to know what makes you tick, what it is that you like to do and only approach the market that way. You can't be, you can't really be a super successful trader copying anybody else. You can only be truly successful if you figure out your own style, your own psychology. So most traders don't understand their own psychology. They think that chart patterns, learning how to, chart patterns are going to make them money, and it's not true. Here's, just type in trading patterns on Google and see what comes up. You'll get dozens and dozens and dozens of patterns. Here's 16, right? Classic patterns, head and shoulders, whatever, right? Can you make money trading these patterns? Can you? I can, but not all of them. Only the patterns that correspond to my approach to the market, to my trading methodology. So chart patterns are a dime a dozen. They don't mean much. What you have to figure out is what you should trade. And this is what the second half of today's presentation is about. Here's some trading strategies that are taught in the Trading the Pristine Method course. We talk about gaps. We teach you gaps. There's different kinds of gaps. There's professional gaps, novice gaps, continuation gaps. We teach you to play reversal plays or climactic plays. We teach you to play breakouts, breakdowns, pullbacks, buy setups, sell setups, continuation patterns, 1, 2, 3 patterns. We teach you to play the bull-bear trap plays, shakeouts, scalps, late day breakouts, day trading, swing trading, trading earnings. But can you or should you do all of this stuff? You can't. So the question becomes, what should you trade? And that question haunted me in the beginning because I read the book Market Wizards, the original Market Wizards. He wrote, I think, a couple other ones that weren't as good. But in Market Wizards, Jack Schwager, who was never a very successful trader, he set out to interview the world's best traders thinking that they all did the same thing. That's what he thought. And he just wanted to learn what it is that they all did so he can do it too. And he talks about how he was never able to get his account balance to above 100K. And when he went out to interview these traders, he found out that not two traders traded alike. Every single trader traded differently, but they all traded in a way that suited their own natural personality. In other words, they traded to they traded to their individual strengths. So he says, in trading as an archery, if there's effort, force, straining, struggling, or trying, it is wrong. I mean, a statement like this to me is a bit haunting. Here I am, struggling day in and day out, forcing, straining, struggling, trying to make it work. And he's saying it's all wrong. If there's effort, if there's struggle, if there's straining, what does that mean? What he means is you have to find out, you have to trade in a way that actually suits you as a person. And so when I learned the Pristine Method, I learned a bunch of other things at the time, and nothing really seemed rational and objective except for the Pristine Method. It's the only methodology that was objective, that answered the question of why the stock moved the way it did, right? Whenever I analyzed the chart according to the Pristine Method, I could make sense of it, always. Most other methodologies, I couldn't. It didn't always work. It wasn't objective, it wasn't rational. But then I said to myself, okay, well, with all these strategies that are available to me as a pristine trained trader, how am I gonna figure out what it is that suits me, that makes sense to me? And that's when I thought about dividing the day into phases. And so I figured that if I'm gonna trade the open, from 9:30 to like 10 o'clock, the first 30 minutes, there are no well-established trends or much price action that I can analyze. If I'm gonna trade the open, then I have to be relying mostly on gaps, right? And so it occurred to me that wait a second, I have to learn gaps if I am to take advantage of the open. The open is the most lucrative part of the day by far. It was true 19 years ago, and it still is true to this day, right? So I learned how to trade gaps. Then I said, what else is there after the open? Well, I knew that there are stocks that are really, really strong and stocks that are showing relative weakness to the market. And so I figured out that I want to play the strong stocks long and short the weak stocks. And so my second strategy was born. I called it relative strength at reversal time, but it doesn't have to be played at reversal time. So I figured out how to play stocks that are showing relative strength to the market and time my play with the market using breakouts, pullbacks, and 1, 2, 3 patterns. And then I said, is there anything else that's available to me to trade as a pristine trader? So there's gaps at the open, and then after the open, then I'm gonna trade with the market in the same direction as the market, but focus on stocks that are stronger than the market or weaker than the market. Is there anything else? And it occurred to me that sometimes we get stocks that go parabolic. And then that's when my third strategy was born, and that's the climactic buy setup, climactic sell setup play. Everything else, I just basically dropped. So that's how I figured it out in a nutshell. So I want to show you how that translates into a trading plan that I put together, which took me a while to put together in the beginning. And now I don't ever look at it because it's in here. I don't have to consult the trading plan. I know exactly what I'm looking at, what I'm looking for during the day. I don't need to read a book or a trading plan that tells me what to look for. So the idea of trading in a way that makes sense to me, that I love and enjoy, is truly the foundation of my trading plan, as you will see. So Market Wizards, with that single quote that you have, if there's effort, whatever, trying, straining, struggling, it's wrong. With that one sentence, it basically revolutionized my trading and inspired me to explore my personality and trade in a way, trade accordingly, not copy somebody else's approach. I'm still using the pristine method, but I'm doing it my way. So I'm going to share with you that in a few minutes. First, here's why most people are terrified to write a trading plan. It is true that the vast majority of people do not have a trading plan. It applies to you. It applies to almost everyone in the chat that's attending the webinar. You don't have a trading plan because when you write a trading plan, now things suddenly get real. Once you commit to a trading plan, you are suddenly accountable for your results. When things don't go well, you can't really blame anybody else. Now you have no choice but to take responsibility, and nobody likes having their own nose rubbed in their face, right? Our ego gets bruised, and that's nobody likes that. I mean, I don't like it. Nobody likes it, right? But that's part of the growth process. So if you avoid it, you will never ever be the trader that you're meant to be, that you can be. You might become marginally successful. Maybe after 10 years, you won't need the training plan because you have so much experience that you know exactly what it is you're looking for day in and day out. But the truth of the matter is, if you just simply work on writing a trading plan, you'll be so much better off for it. And it shouldn't have to take very long, especially if somebody's willing to share with you their outline for the trading plan. I had no such thing when I was writing the trading plan. I had to figure it out from scratch. A plan is required for success. A plan allows you to move forward systematically. You know what's working and you do more of it. You learn what's not working and you eliminate it. That's the only way to ultimately boost your P&L in the long run. I'm trading the prediction markets these days, and in the beginning, I didn't know where to. I mean, I was trying, different things, but now I'm becoming more picky. Now I know what doesn't work and what works. Not I don't know everything because I've only been doing it for a few months, but that's the only way to really accumulate equity over time, is to eliminate what's not working, and then to focus. Basically, if you eliminate what's not working, then you end up with all the good stuff. So now you're gonna get the short version of my trading plan. This is actually my actual trading plan. I'm not gonna go over all the detail, but I will go over the outline and go over it in a bit of detail. So I encourage you to take notes, or to at least watch the recording, but I encourage you to take notes and to think about it yourself. The hardest thing about writing a trading plan is to actually get started. We always resist it. When I was going to school, when I was going to college, I remember how much I hated writing essays, because I learned English as a fourth language, not a first, not a second, not a third, a fourth language. So I struggled when it came to writing essays. So I would resist it, and I would rationalize my way out of doing it until the night before, and then I would stay up all night working on it. Why? Because I just didn't want to do it. But I realized that the moment you start, it's not as difficult as you thought it was going to be. So that's the hardest thing about trading plans, is actually getting started. So people would say, or I would say, where am I gonna start? What section should I tackle first? Any section you want. Start with the section that you actually enjoy the most. Maybe writing out your trading strategy, like in detail, what patterns you look for during the day. Don't worry about working on the risk management or money management section, or whatever sections you don't like. Just work on what you like in the beginning, and as you get started, it becomes much easier to actually get through with it and eventually complete it. So start taking notes. This is my trading plan. Initially was, when I first put it together, it was 77 slides or something like this. I decided to do it in PowerPoint so I can play a slideshow every morning before the market opened. I'm on the West Coast, and every day after the close, when I was having lunch, I would play a slideshow and make adjustments. But you don't have to do it in PowerPoint. You can do it in whatever, you can use whatever medium you like. But this is the outline of this is the table of contents of my trading plan. First section is goals and objectives. This is the page number. It's on the second page. Then on page 3, I have money and risk management. Then I told you how I came up with my 3 strategies. I told you that my second strategy was relative strength and relative weakness, but I later on decided to mostly do it off the 15-minute time frame, because I didn't want to play relative strength, relative weakness on the 1 minute, 2 minute, 5 minute, 15, 30 minute, hourly. It's too many time frames. So I basically said gaps is for the open, for the morning. The 15-minute relative strength strategy is for the afternoon, mostly. Like after 11 o'clock, 11:30, I can use the 15-minute strategy to enter into plays that may not be gapping, that might not be gappers. And then my third strategy is the reversals, and I can do it in the morning, late morning usually, and throughout the afternoon and early afternoon usually. So those 3 strategies account for the bulk of my trading and trading gains. I do other things. I do scalps, level 2 trading, but those are tactics. They're not really strategies. Then I have a glossary that, look at this. It's like 7 pages long. because it has a definition of every adjective, of every concept that I used in my trading plan. You don't have to define it in the trading plan, but you need to make sure you know what it is. When you say a strong stock, what does that mean? Or a deep pullback, like a deep pullback, what does that mean? Is 50% deep, or is it 60%? Is it 60% and greater deep? So you have to define all of that stuff. A lot of times we think we know what it is the pattern that we're looking to do, but once you start, like if I tell you to describe, to write down in detail what patterns you trade on a daily basis and hand it to somebody that knows nothing about trading, will they be able to follow your description? Will they be able to follow it? Most of the time they won't, because you don't know your methodology and your strategies in simple terms. You use maybe trading jargon, but actually, if a 7-year-old were to try and follow your trading strategies, would they be able to do it? Most of the time they wouldn't. And so that tells you that you don't really know your stuff as well as you think you should. Okay? And if this is your livelihood, if this is what you're spending your time doing every day, and that's what you're really truly trying to be good at and successful at, it's worth your time. It's worth the pain and the suffering that it requires initially a little bit to put it all together. So at any rate, those are my strategies, glossary, and then I have some like trading reminders, mostly trading psychology notes and technical analysis notes. But those are mostly reminders. They don't have to be in the trading plan. So goals and objectives. Basically, my overarching goal is to find setups that strictly meet the strategies outlined in this trading plan and execute them flawlessly. If I do that, then I will not feel guilty. I will not feel bad when the plays stop out, because I followed my trading plan. The objectives are the little things that I want to achieve to really have the income that I aspire to achieve. And I'll show you what I mean in a minute. But I'm looking for 60% batting average. This is where people immediately think, oh my God, 60%, that's just 10% more than 50%, which is a flip of a coin. It's not true at all, by the way. The most successful traders don't have anything higher than 60% batting average, or hit rate, or win rate, whatever you want to call it, right? The vast majority don't have anything higher than 60, 65. Okay? The difference between a flip of the coin and a 60% hit rate is very vast. Not mathematically, not because 10% is so huge. It is, but that's not the reason. The reason is if I can be 60% of the time right, and still make twice as much when I'm right as when I'm wrong, then we're talking. So you're right. A flip of the coin you should be right about 50% of the time, but how much will you make? Are you going to make like 1 cent, 10 cents? Are you going to make... So for me, I'm looking to make 2 R's, 2 risk units. So if I'm risking 1,000, I'm looking to make $2,000 and per play on average, and still be 60% correct. Big difference than a flip of the coin. So batting average or win rate, 60%. Sharp ratio, which is your average winner compared to your average loser, of 2.0. Reward to risk, basically on when I'm taking a play, I want the target to be, or my reward zone to be twice as big as my risk area. So risk to reward 2-to-1. And then number of trades, I want to do about 7 trades per day. It's actually 6 point something. Now, you're not going to be amazing you're not going to have a very high win rate and a very high Sharpe ratio and still be able to take a lot of trades per day. So figure out what it is, how you're going to make money. are you going to make money by being super selective and maybe having a really, really high win rate, like 80%, let's just say, which almost doesn't exist, FYI. People that think, oh my God, I'm right 80% of the time. Yeah, track your results and send them to me. You're probably right 40% of the time. You know, don't get offended, but that's true. People think that they're right most of the time. You're wrong most of the time. You just don't know it because you don't track your results. So my point is, if you are very, very selective, let's say, you know, you only take one trade per day, sure, you can have a very high win rate, but then you're sacrificing, you know, you're passing on a lot of decent plays, as I will show you in a minute. So you have to decide how you're going to make money. Is it through your win rate? Is it through your very high Sharpe ratio? I can have a Sharpe ratio of 10 to 1, basically, or any number you want. I can take, let's say, 100 trades and only exit if I get 10 to 1 reward to risk. Everything else, let it stop out. And so what you end up with is a very high Sharpe ratio, but a very low batting average. So you can basically boost one ratio at the expense of another. Okay? The beauty is it's a balancing act, and you wanna be very balanced as much as possible. So here's an example, a table that explains it all. Let's say you take 6 trades per day and you risk $500 per day. Obviously, in the beginning, you want to risk maybe $5, not 500, $5. But let's say, you know, you're a seasoned trader and you take 6 trades per day, you risk $500, your Sharpe ratio is 2.0 and a win rate of 60%. So 6 trades, win rate of 60%, that means so 60% times 6 is 3.6 wins per day on average, and then 2.4 losses per day. 2 R's means 2 risk units, so 2 times 500, right? So per trade you win, your winning trades are twice as big as the losing trades, so 2 R's minus 1 R. So that means you make, on the winning trades, you make 7.2 R's. On the losing trades, you lose 2.4. Subtotal 4.8 times 500, that's $2,400 per day on average, per week, per month, per year. So boom, that should be a light bulb moment for everybody. With a 60% win rate, you can actually make $500,000 per year. And you're not taking crazy risk. You're only taking $500 risk per day. That's not per trade. That's not crazy risk. In my opinion, that's not crazy risk at all. Let's say we double your risk from a $500 to $1,000. Well, of course, your bottom line is going to double also. So you go from 576 to 1.152 per year. Let's say we change, instead of the risk per day, we keep it at 500, but we change the number of trades to 4. So everything else is the same, 500 per trade, 2.0 Sharpe ratio, and 60% win rate. Now you take 1/3 less, right? So you do 4 out of 6 instead of 6 trades. Your bottom line also has a linear drop by 1/3 also. So now you're looking at making 384. Okay. Now let's say we go back to 6 trades per day, but now we change the Sharpe ratio to 1.5. So your average winner now goes from $1,000 to $750. What kind of impact does it have? It cuts your P&L in half almost, from 576 to 360. Huge. Because this is the Sharpe ratio, and the batting average is the same thing. It goes from, let's say, 60% to 50%. That's nothing, right? Also, you almost lose half of your P&L. So it's really hard to improve the Sharpe ratio and the batting average, without sacrificing other things. Meaning, I can improve my Sharpe ratio dramatically, but I might have a very low batting average. Or I can have a really high batting average by being super selective and only take 1 trade a week, like literally pass on everything unless it's absolute perfection. Okay, but now I'm taking, instead of one trade, 6 trades a day, I'm taking one trade a week. I'm worse off for it. I'm not better off for it. I'm worse off. So it's all, like I said, a balancing act, and you have to figure out how you're gonna approach trading so that you're not sacrificing one thing to boost another. Way that makes perfect sense to you. So so based on these tables that I just went over, I came up with my little objectives, which I went over already, and my stats match those objectives, more or less, match those objectives. So your action item, list your goals and objectives. Again, keep it simple to start. Money and risk management. This is kind of a preview of the section that I have in my training plan on money and risk management. My goal is just 2 hours per day. It's fine. If I can make more, that's great. Or 10 hours per week. I have rules as to what to do when I have an open position that reaches 2 hours. Well, I trail to break even. If I'm up 5 hours, then I'm always gonna be trailing by giving it 2 hours basically. If I'm up 5 hours, maybe I'm on fire. My goal is 2 hours, but I'm up, let's say 5 hours, 10 hours. Does that mean I should stop at 2 hours? Then I'm never gonna have those, $10, $20, $30,000 days. I'm always gonna be just making 1,000 every day, and that's it when I make money. So no, I can exceed it, but at the same time, I wanna protect the majority of it so I don't give back too much. So I'm protecting 3 hours when I'm up 5. If I actually reach 5 hours for the day, then this is on closed booked profits. I'm actually going to give myself one more shot. If I make money, then I keep going. If I don't, then I'm done for the day. Does that make sense? Because the most demoralizing thing is to be up $5,000 and to go home negative, or to give it all back. That's like demoralizing. It doesn't build confidence. It's the opposite. So if I'm up 5 hours, I'm gonna protect them. I'm gonna keep trading, but I'm gonna protect the majority of it. When it comes to unrealized gains, those are open trades. I'm giving it, I'm willing to give it up to 2 hours against me before closing the position. I also have rules for open exposure and maximum loss for the day and the week, and what to do when each is reached. How many open positions can you have at any given time? What's your maximum loss for the day, for the week, for the month? What happens when you reach it? Do you just shut down and go skiing, or go on vacation, or do you do something about it? So this is just a preview of that section on money and risk management. Your action step is obviously create rules that work for you based on your own methodology and approach to trading. Probably the single most important section of the trading plan is the section that details out the strategies that you're going to trade, how you're going to trade the market. And this is an example of that reversal play that I told you about. I'm withholding some of that proprietary information, but I'm still sharing with you the outline for the strategy. Every strategy that I write has 4 sections in it: the must-haves, the can't-haves, the would like to have, and the trade metrics, which are the entry, the stop, the target, and the management for that strategy. So the must-haves are the pattern requirements, the technical picture per the book, per the manual that we teach, per the course manual that we teach you. So you can list them out, and then you can actually make it your own by adding additional requirements to the play. For example, we teach you how to play the pullback pattern, or the climactic buy setup. But do you wanna do every play that meets the criteria per the book or per the course manual, or do you wanna add other criteria so that the play is absolutely perfect to you? So are there any additional criteria for the stock? Are there any additional criteria or requirements for the market? Can you play long a stock that's falling apart when the market is really, really bullish and your stock that you're looking to play long is bearish? Probably not a good idea, right? And the same with the can't haves section. What are some of the can't haves for the stock and some of the can't haves for the market? Are there things that if they show up, the strategy is null and void? You cannot play it basically for the stock and for the market. Think about it. There should be things that will disallow you from taking that play if they are present. What are they? So list them out. And then the would like to haves are, this is the icing on the cake. You know, I would like it to be at support, let's just say. I would like the stock, if it's a reversal play and the stock is dropping like a rock, I'd like it to be this much away from the moving average. I'd like it to be this much oversold, right? Or overbought. And what about the market? Do you want the market to be moving up? Do you want the market to also be overextended to the downside so that when the market snaps back, your stock goes flying? So list the would like to haves for the stock and for the market. So far we talked about 3 sections: the must haves for the stock, the must haves for the market, the can't haves for the stock, the can't haves for the market, and the would like to haves for the stock and for the market. And then here you specify how you're gonna enter the play. Where's your entry? Mini and full, there's 2 types of climactics, that's why. Where's your stop? Usually it's the same, whether it's mini climactic, full climactic, it's the low of the day. And your target, your overall target or targets for the strategy, as well as the management. How are you going to manage the play once you're in it? So if you don't know how you're going to manage it before you get in it, guess what? You're going to end up mismanaging it. It's just a given. You're going to start managing it based on how you're feeling, based out of your emotions, not based on what's in your trading plan. Now, people say, well, that's like 2 pages worth of information. How am I going to memorize all of that? You don't need to memorize it. You will know it like an artist knows good, like an artist recognizes good art, or a pianist plays the piano. Like, they don't need to memorize stuff. They know how to play it, or the violin, whatever. So it's the same thing. Once you know it really, really well, then you won't need to memorize anything. You'll understand what it is you're looking to do every day, and you'll be able to do it easily. That's a section on the how to write strategies, right? So list criteria for every strategy that you want to trade. Then I have, again, daily reminders, general principles. These I honestly got from Mark Douglas, Trading the Zone, right? Just reminders for myself that I trade to acquire skill, not for the money. This way, I don't get emotionally invested in the market day in and day out, which is not a good thing. I predefine my risk and reward for every trade. If you don't accept the risk and predefine the risk before putting on the trade, it's not a good thing. Basically, if you're not okay with the risk that you're taking, you will end up mismanaging it. So these are just good reminders to have. And then some tactical principles. The market's biggest moves, I know that to be true, ignite from its smallest bars. In other words, explosive moves almost always originate from narrow range bars, and a cluster of small bars signifies the calm before the storm. This is true. It's the market, the reversals in the market usually happen after a slowing in momentum, like a car that's trying to make a U-turn, right? It has to slow down a little bit before it can successfully make a U-turn, and it's true in trading as well. So normally when I see a big drop in the market and then I see a narrow range bar or multiple narrow range bars, that's the car driver trying to make a U-turn. And so this is just a reminder to myself that the market's biggest moves come from its smallest bars, which is true, especially if the smallest bars are preceded by big bars, meaning high momentum, low momentum, and that's when you want to get into the play. Once the high of that narrow range bar or bars gets taken out. Your action item set general trading principles and strategy specific rules. You now have a solid outline. When in doubt, keep it simple and be conservative. Now, how a trading plan actually makes you money. This is it. It's the pair strategy. You put together your plan, you figure out what it is you want to do, you put on a batch of trades, let's say 10, 20 trades. You don't just trade aimlessly every day. You trade, like, let's say, a sample of 10 or 20 trades. So you execute your trading plan, you analyze that batch of trades, you make adjustments, you figure out what's working, what isn't working, you make adjustments, and then you edit your trading plan and put on another set of trades, and so on and so forth. But you don't just trade continuously without reviewing your trades. It sounds boring, but it isn't. Like, if you're printing money, if you're making money doing this, it's not boring. Tell somebody that owns a business that is allowing them to live the American dream, that their business is boring. Their business could be boring, but they might be having the time of their life trading it. I mean, not trading it, running it. Because while it may be a funeral home, whatever, it's allowing them to live a life of independence, of financial freedom. Guess what? It's good business. So the same in trading. This seems a little bit boring, but it isn't once you see the fruit of your labor. It's not. It feels good. It feels good to me, at least. But this is how a trading plan works. You have the plan, you worked on it, you worked your ass off on it, right? You put in all the detail you could come up with. Then you put on a set of trades and you figure out whether your plan actually works or doesn't work. It either doesn't work or you're not following it. It's one of the two things. If your plan doesn't work, then you can fix it. If you're not following it, then you have to figure out why you're not following it. What is it that's basically getting in the way of you following your trading plan? So it's one or the two. It's either your plan is not working or you're not following it. So that's it. That's my little presentation. There are many ways to succeed in trading. You just have to find your path. Hopefully I've gotten you started on that path. This is where unsuccessful strategies should go. Not every strategy that you decide to trade is going to work out, right? And my final piece of advice to you is just get started. Or, as Nike puts it best, just do it. Just do it. Just get started. Can somebody else do it for you? Nah, that's not going to happen. You have to do it. All right? It's not easy, but if you are serious about trading, just do it. Don't try to write. This is another trap that people fall into. They try to make a perfect trading plan. You don't need a perfect trading plan. You can just keep it simple, have conservative goals and trading rules, then measure your results. Keep the good stuff and eliminate the bad, which is even more important. I'm getting over pneumonia, so if I don't sound good, it's because I'm still recovering, but hopefully you enjoyed today's little presentation. I'll stick around for Q&A, and let's hear from Mike.
Okay. Thank you, Sami. Always love learning from you. So let us know what you thought in the audience. G. Harkey saying, thank you, great presentation. But I think the best comment I saw here is from Raymond Wells. He said, he's so right. I started in 2019. No trading plan, kept losing 5 years. 2026, my first green year, because my setups and mistakes are now part of my memory. So he bled capital for 5 years because he did not have a plan. Yep. So we're getting some 10s here.
and so that's the thing, is that I've met people before where they said, you know what, I don't need a training plan and I'm already successful. True, but it took you probably 5 years, 10 years. So this is a way, this is a shortcut. If you write a trading plan and you actually diligently work on it and work on following it, then you don't need to spend 5 years before you turn the corner. You can do it in maybe 5 months, not 5 years.
And that's 5 years losing money too, not just,
Exactly.
it's not just time. Okay, all right. So we want to talk to you guys about the Pristine Mentorship, which is the big program that Sami and James run together. And again, James was a student in this, and now James is a master. Okay, we believe this is the biggest and best trader transformation program in the entire industry. It is limited to 30 students. 10 people signed up right off the bat because these programs always sell out fast. Again, 20 spots left. And the biggest thing is this is not just another online class. The reality is, I guarantee you, I could do a weekend lecture and convince you I am the greatest trader in the world. And a lot of people fall into this trap. They attend some weekend lecture from a non-trader that doesn't actually know how to trade. And here's a nice comment from Isaac. I'm not paid to say this. The T3 framework is the only one I've understood objectively. Once you learn it, you can't unlearn it. Okay, so this is what you need to succeed. So first thing is you need a system. That's your foundation. 2 is community, because you can't do this on your own. James is a success because he learned from Sami. Sami had his own mentors. And again, the final point is mentorship. You need to work with people who have been through the same exact path that you are going through. And big thing is you can earn while you learn, and you see Sami and James's real trade ideas right in front of you. So again, they don't just teach on the weekend, they trade in front of your face, and there are limited spots, so you get the attention you need because you want to be confident, consistent, and happy. Honestly, it feels like a lot of people trading have a really, really expensive hobby that stresses them out. And if you're going to burn like 250 grand in the market this year, I say close your account and buy a boat. Just buy a boat and have some fun, or buy a Lamborghini or something. But if you want to be happy and consistent, this is what you should do. So it's streaming online, so you can join from anywhere in the world, and everything is recorded for repeat viewing. So phase 1 is October 24th and the 25th. This is the live training where you learn the X's and O's, you learn the chart patterns, risk reward, all that stuff from Sami and James. That Trading the Pristine Method is the core training, and Opening Rush teaches the gap strategy, which is a huge part of their work. Okay, and here's James teaching on Zoom with his lightsaber. This really happened. This is not AI. Some people think James is AI. James is a real person, I swear. And again, this is live teaching in Zoom. Obviously, we cover people's faces for privacy reasons. Then you go live in the room. And again, this is not just another weekend lecture. You see them live in front of you. They're telling you the ideas they're taking, what's going on in the market. And the idea is we want you to also make money as soon as possible. So you go live in the trading room with them. There's also live intraday trading lessons. And again, all the lessons are recorded. And this is what the VTF looks like. There's the gaps list. There's the live charts. There's the chat. We have a whole bunch of people talking. I don't know if you could see, but people are talking about like Rocket Lab in here. And then there is group coaching. Now, this was something we added a few years ago because everybody wanted group coaching. So we added 5 group coaching sessions where you can ask anything you want. And again, everything is recorded for repeat viewing. These are on Thursdays from November 5th through December 12th. And of course, Thanksgiving is skipped. Now, Sami and James, you guys want to work on Thanksgiving? Let me know. Maybe we can squeeze one more in.
Don't mind it.
And again, this is what the group coaching looks like on Zoom, and we cover people's faces and names. We got to get people to put on their cameras. They need to get a little more brave. Okay, and then there's the ongoing development after that. You also get 1 year of the Pristine Active Trader VTF. That's the live trading room. You get Sami's #1 newsletter, and you get 2 courses on top of that. So it goes on for an entire year. And we don't know of any program that offers all this the proven system from two top pros. Then you learn the system in the real world so you can actually start making money. And then you get live ideas and guidance for an entire year. If you guys name it in the chat, if you think anybody has anything that is better than this, because I've looked at a million training programs, nothing is as good as this. So this is for two people, basically. There's the experienced traders that want to be more profitable, and then there's the new traders that want an end-to-end system for success, and you can be a newbie if you are serious. So James took this mentorship program. He had no trading experience, and then he was basically leading the room in a matter of months. Our friend Jack is saying, Sami taught me the pristine method 13 years ago. He does a great job, FYI. Okay, and we've had students from 23 countries across 5 continents. We have everything from the USA to Kazakhstan, Hong Kong, the Virgin Islands, Denmark, Bulgaria. I would love to get to 7 continents one day, but I don't think anybody's coming from the Arctic Circle. Okay, so biggest question, of course, is always, why now? And it's obvious. Everybody knows this. You guys get this inherently. The clock is ticking. The sooner you learn, the sooner you can potentially make some real money. Because, we had a guy before talking about how he bled money for 5 years. So, God forbid, he could have lost $500,000, $1 million in that time. I hope it wasn't that bad, but that is possible. So the sooner you learn, the sooner you can stop losing money and potentially start making money. So think about your goal. Do you want to make 10K a month, 500K a year? Whatever it is, you have to think about what is it worth to you to make that money sooner. Raymond saying lost 130K in 5 years. That's a lot of money. Bill Croak, I'm getting to it. Just give me a minute. Okay, so again, so how much money have you lost with bad strategies? 50K, 100K, a million? I think I've lost about $100,000 myself on stupid trades. Okay, so again, you learn the system, you get feedback, and you get guidance for an entire year. So we're going to play you a message from our friend Christopher and Micah also. So this is going to take about 90 seconds, so bear with us.
Definitely, I already made back the mentorship tuition plus more. It was about a couple weeks ago. We made a decision that because of the success of the day trading, my wife no longer has to work anymore. I could actually retire my wife now. She works as a nurse, and now she's officially retired, and she's a stay-home mom with our kids. So I mean, our lives has already changed for the better because of James and Sami. All thanks to them. I was actually that one guy in the class that just kept asking questions, and they didn't mind at all. They answered all my questions with no problem. And even after the mentorship, you're in the trading room with them every day. You ask them a question, they're willing to answer.
I think I just got better.
Okay, all right. So you heard from Christopher. Obviously, not everybody can do that, but you see what's possible. And Raymond saying, what a blessing for a woman, stay-at-home mom with the kids. Okay, all right. Sharif is saying lost about 90,000 those last 5 years. Sorry to hear that. But nothing else to say. That sucks. I hope you've been doing better. Okay, this is what some other students have told us. Micah from Hawaii, he left his job. He moved back to Honolulu to trade full-time. So he went back to Hawaii, which is, I don't know. I'm getting kind of sick of Brooklyn. I would love to go to Hawaii. Ken from Texas saying, Sami practices what he preaches. He's sharing the money-making strategy that he relies upon. I'm going to go through these kind of fast. Otherwise, we'll be here till 3 in the morning. AJ from North Carolina is saying, seeing where James is now, I felt I could also reach his level. Brian from Seattle said, I covered the entire cost of the mentorship with one trade idea I got from Sami, and I believe it was GameStop. Milady from New York says they are great at teaching and have the patience. Dennis from Australia says, James shows a passion to see the students get started in their own trading careers. Ben from Canada says, following the mentorship, the gains became more noticeable. Ren from Virginia said, it can change your life. It has mine. James from Texas, and this is a different James. I made back what I paid for the mentorship and more during the week. So this person paid $6,000 and made it all back during the week and then some. Jason from California, I was green every day I was there. Phil from New York, my account was up nearly 20% in the 5 days of the mentorship. Collins from India, who was the first person ever to do this online, he said it was the experience of a lifetime. I watched all the way from India via live video streaming. This is one person that attended multiple times, said, I learned a lot and was surprised at all the small, important details. Marlene from Illinois said, I learned so much that I did not want the experience to end. And Newell from Florida said, Sammy's collection of material would take years to find any other way. And Zolti from California, outstanding experience, way beyond my expectations. Okay, so there's a total value of $12,769 because you get the mentorship, the trading room, the newsletter, et cetera, et cetera, et cetera. And your price is $54.95 through August 31st. So you save over $7,000 if you go to t3live.com/mentor, t3live.com/mentor. It's limited to 30 spots. There are 20 left because 10 got taken right off the bat. But if you go to t3live.com/mentor, you can see the entire schedule, what happens every single day, everything that's included, so everything you need to know. Again, t3live.com/mentor. If you have a question, email amber@t3live.com, amber@t3live.com if you have any questions, and I will answer the first question myself. Do you have payments? Yes, we can arrange a payment plan for you. So contact amber@t3live.com. If you have any questions about payments or anything, she can hook you up right away. Amber has walked thousands of people through educational programs, so she can help you figure out if this is right for you. Michael Edwards is saying, thank you, Amber. I am a big fan of Sami for sure. Wish I could do it now. Okay, all right. So I'm going to actually start the Q&A myself. So you guys, if you have questions for Sami and James, load them up in the chat. So James, I'm going to ask you the big question. When you took the mentorship back in 2019, what really surprised you when you walked out of it?
I mean, the information that Sami was providing. So I don't know what it was. It was just everything, because the methodology is so objective and logical, it just made everything make sense. Like all the light bulbs turned on and everything just kind of made sense. So walking out of there, I totally knew like what the game plan was. What am I looking for? What are gaps? Why are we playing these gaps specifically? Like I had everything explained, all my questions answered, like everything had a reason behind every single action that I took and that Sami was taking. So it just made it that much more understandable, reasonable, and it was like a great approach to trading.
Okay, and Sami, I'll ask you a similar question. When you originally did the pristine method yourself, like why did it make sense to you?
Because it was what I told myself at the time was that the logic is intrinsically valid, meaning it made sense. No matter how much I tried to poke holes, I couldn't. It was logical, rational, objective, and repeatable. So that's why I stuck with it, and I never, once I learned the pristine method, I promise you, I never did anything else outside of it, except when I took a bad trade. But other than that, I never looked elsewhere. I never tried to learn what these people are doing or what that guru is doing. I never ever had any interest anymore, other than the pristine method.
Okay, here's a question from Johan. So Sami, when you talked about increasing the amount of trades, did you mean, I'm trying to translate this the best way. Were you taking more trades in quantity, or were you taking like bigger trades, like more dollars?
It's both, but basically I learned to manage risk. And so I can take, as long as I'm protecting break even, I can keep actually taking more trades. So, but over time, you learn to be able to juggle multiple trades at the same time without any issues. It's only when I'm losing or I'm near break even that I cannot take more trades. But as long as I'm actually making money, I can keep taking more trades.
And in terms of methodology, like how important you okay, Sammy?
Yeah, I'm like I said, I'm just recovering from pneumonia, but otherwise I'm okay.
Okay, all right. So I'll give your voice a break. So James, in terms of like strategy methodology, like how do you weight risk management versus shooting to make as much money as possible?
You mean like how much do I risk to make an X amount?
Yeah, I think that's a better way of putting it.
Well, so that's all part of kind of what you're trying to accomplish, right? What are your goals? So, like the table that Sammy was showing, right? X amount of trades, X amount of, or X sharp ratio, batting average, all of that can be tweaked depending on what your goals are at the end of the year, at the end of the month, at the end of the week. So, I mean, the thing about trading is that unlike any other business, like you can scale up just like that. You add a zero and then you scale up. Now, of course, we could talk about liquidity and the type of stocks you trade. But if you did want to scale up, you can. But what I recommend for new students and new traders is obviously to let's see that positive number first, and then let's crank up the risk unit that you're comfortable with slowly until you kind of get to where you want to be.
But is it like do most beginners like, or at least let's just say people of the first few years, do they find it like is it 5 times more difficult to have $5,000 at risk versus 1,000? Like even if you're executing the same trade, like is it really hard for people to make that leap?
Well, that's relative too, because there's certain people, $5,000 may be $5 to somebody, or it may feel like $5 to them. So I think relative to what you're comfortable with trading, if 5,000 is a big number for you and you're going to be sweating inside of that trade and you're not going to make the right judgments and trade objectively and you're going to let your emotions kind of take over, that may screw up the trade. So that's why we kind of go through this process of gradually scaling up to be comfortable at every level you're trying to get to. So whereas, yeah, there are beginners who just want to retire overnight, right? So they go big or go home, and then they dig themselves a big hole. You can't manage the trade properly because it's such big money.
Okay, here's a good question so Brooks is saying, does this program work for someone who's working full time, has time for the first couple hours of the market? Okay, so I think Brooks, this is a really interesting question because we include in the training, you hear it where it says opening rush live. That is Sammy's gap strategy, where he focuses on the open of trading. So Sammy, can you talk a little bit about why you're focused so much on trading those opening gaps?
Because the reason why I like to trade gaps is because they often make a move, a 5-day move in 30 minutes or less. So they make a big move and I want to capitalize on it. And so that's why I like to trade gaps, but also because I understand the psychology. When let's say the stock was breaking out the day before and then the next day ended up gapping down, trapping everybody that bought it yesterday. Well, guess what? People are going to probably exit the next morning, which means it's going to drop. And so I look to short something like this at the open. So I trade gaps for 2 reasons. First, because they make an outsized move. And then the other reason is because I understand the psychology of traders that are trapped in it. Another thing is about doing it part-time. Honestly, for some people, you're better off doing it part-time, because if you just if you try to do it full-time, you'll end up doing stupid stuff. Most of the bulk of the gains happens at the open. Also, even a lot of the swing trades that I do every day, they trigger in the morning. They don't trigger in the afternoon. They trigger like first thing in the morning. So I don't really need to be around to watch those trades. Can I share today's trades, Mike? Or
Of course.
so here it is. But these are every single one of these I entered into either today or yesterday. Every single one of these. I don't know if I'm showing.
Uh,
Do you see that?
Yep.
So this is Solana. It's up 2,800. Coinbase up 1,000. Ethereum. This is yesterday in the room, live on the mic, up 6K. Gilead, we talked about it yesterday in the live stream, up 2,400. GME, the day before, I mean not today but yesterday, short, it's barely up. HUD, 2,200. Bitcoin, up 10,000. SBET, up 2,000. SGov is just like it's a government thing. It basically pays like 4% every year, and it is state tax free. So whatever cash that I have that's not being used, I just put it in SGov basically. But all of these trades, every single one of them triggered at the open or shortly after the open. I didn't need to do anything about it. Like that's it. This is just the last couple of days, and this is just one of the two accounts that I actively manage. So not every day is going to be this positive green, but when things go your way and you know what you're doing, it's not that difficult, honestly. If again you know what you're doing and things are going your way, I think you're bound to make money. But it's not. This is you're looking at the highlight reel. You're not looking at somebody who just started. To get going, you have to do what we talked about during the presentation, which is, do you have a trading plan? If not, then that's the first part. Do you have a trading methodology that you want to work on, that you want to use to approach the market with, to trade the market with? If not, you're not going to be able to take advantage. Today, Bitcoin made the day for me, and not just Bitcoin, but the individual stocks that usually are tied to Bitcoin, like Coinbase, Robinhood, So you see what I mean? After a while, it becomes easier. It's never really easy, but it becomes easier to take advantage of the opportunities. And most of the time, whether it's day trading or swing trading, it happens in the first hour of the day. So I don't even need to be around. In fact, I went to a doctor's appointment at 10 o'clock my time. 10 o'clock my time is 1 o'clock Eastern time. And I'm about to go to another doctor's appointment right now. So, Mike, I got to run, by the way.
Okay, all right, we are going to wrap up. Okay, Sami, thank you for joining us. Always appreciate it.
Thanks, guys. Appreciate it.
All right. Everybody thanks Sami, because Sami really fought through pneumonia. He's been really going through it. All right. I'm just going to go over the offer very quickly, and then everybody can go home. Okay. So again, you're getting everything you see on the screen here. You get the mentorship. You get a year of the room, all the training, the newsletter, 2 more courses, plus all of Sami's trading resources, all his secret spreadsheets, everything. Total value is $12,769. And you can get in for $54.95 through the end of the month. You save over $7,000. T3live.com/mentor. There's 20 spots left. There's probably some are going to go tonight. So if you have any questions, email amber@t3live.com, amber@t3live.com. We will send you the replay tonight. Everybody have a wonderful evening. And James, thank you. Always awesome to work with you.
Likewise. Thank you, Michael. Thank you, everyone.